Hey everyone, Giovanna here with Flow State Financials, and I am so excited to present to you our free all-in-one personal finance tracker. I built this resource to cover all elements of personal finance, from looking at your net worth to analyzing your expenses and building a budget that works for you, to debt pay down strategies, savings goals, and even some investing rebalancing. It includes a ton of features and information, and I wanted to make this video to walk you through every tab, kind of explain a little bit so that it is hopefully as useful to you as possible. It is free to download on our website. I'll link the information below. So go ahead, check it out, make a copy, and save it for yourself. The big thing here is that I want this to be personal for you, right? So I will walk you through the way that I set it up and give you some examples, but please feel free to change things, customize it to fit your needs. So without further ado, let's get into it. Okay, so welcome to the tracker. The first tab is all about personal net worth. If you know anything about business or accounting, think about this as a balance sheet. There are two options that I made for you in the tracker. The first is monthly, and the second is quarterly. Now, I will be completely honest, I do this on a quarterly basis. So at the end of every quarter, I look through all of my assets, all of my liabilities, and calculate my total net worth. With that said, if you are new to this process and want to kind of build the habit, build the muscle of checking your net worth, I made a monthly sheet for you as well. So that way you just get in that habit of checking all of your accounts monthly, kind of understanding how this works. And as you get more comfortable, you can decide if you would rather move into a quarterly cadence. Either is fine with me. Again, this is all about you and how it makes most sense for your process and to encourage long-term sustainability. So this is the monthly tab, and honestly, it is quite straightforward. You are just looking at all of your accounts, everything you own, your assets, minus everything you owe, which are your liabilities. Assets minus liabilities will give you your total net worth. And don't worry, no math is required. The tracker is set up to do all of the calculations for you. So all you have to do is plug in your numbers. So let's run through an example. At the time of this recording, we are in April. So I would just go to the April tab here. I listed out some options for you here for some assets and some liabilities, but again, make this tracker your own, okay? You can remove anything that doesn't apply to you. You can add elements that do apply to you. Maybe you own multiple properties or multiple cars and you want line items for each of them. So again, all of this, you can customize it to make it your own. So let's play around with some numbers here. Let's say you have $5,000 in your checking account. Again, I am totally just spitballing numbers here. I'm not saying that these are any sort of goal figures that you should have. Again, meet yourself where you are. We're just filling in information. Okay, so we have the 5,000, let's say, in your checking account. Let's say you have 2,000 in your savings account, but you're working on padding that. 401k, let's call that 10,000. Let's say you opened a Roth IRA last year and you just popped in 500. If you have any other investments, maybe a taxable brokerage account, whatever that might look like, you can put it here. Let's say you have $1,000 sitting there. Current value of property. This is only if you own property. If you rent, you can skip this. One thing I will say though, if you rent and you gave a security deposit, this is an asset. This is money that in theory you should be getting back, right? So you can, update this to be security deposit. Again, tweak it to meet your needs. But let's say you do own a home and you find an average on Zillow, Redfin, Realtor.com, and say, I would say this is probably worth around $400,000. You can plug in $400,000 right there. If you have a car, you can add in the estimated value there. Again, do a little research to find that out. Let's say it's worth $7,000. If you own a business and it is worth something, add in your business there. Just for simplicity, I will put zero here. And then if you own any other assets, maybe jewelry, art, crypto, like literally anything else you might have, feel free to add it there. Again, tweak this to meet your needs. And again, for simplicity, let's just put zero for now. So this is step one. Now we have a complete picture of our assets. And you'll see here that this calculated the sum of all of these elements. Now we're going to move into liabilities. Again, this is everything that we owe. So starting from the top, again, these are just ideas that I included for you to work off of, but do feel free to adjust these however you need. Okay, student loans. Let's say you owe $10,000 on your student loans. Credit card debt, maybe you have a few credit cards and you are only paying the minimum balances right now, and you have a bit of debt that you need to pay off. Add that in here. Again, log into your account, see the total amounts. Just making up numbers here, let's say you have $3,000 in credit card debt. Okay, so your mortgage. So previously we estimated that your hypothetical house is worth $400,000. Let's say your remaining mortgage is $250,000, right? So we would just add that right here. If you have a home equity line of credit or anything else related to your home, you can add it here. Let's just call this zero for now for simplicity. And then again, if you have a car and you are still paying off your loan, you can add the remaining amount here. If you own your car free and clear, you can put $0 here. Let's say we owe 2,000 more dollars on our car payments. And then lastly, if you have a personal loan, a business loan, anything else that you want to add, feel free to use these rows to customize it to fit your needs. And again, for simplicity, let's just say zero and zero. So now you will see that this calculates your total liabilities. It's just the sum of all of these numbers. And then finally, your net worth is automatically calculated for you. So it just takes your assets minus your liabilities to give you your total current net worth. And I want to pause here for just a second because doing this exercise might bring up a lot of emotions. What we are doing here is just looking at the numbers. I think it's really hard to make a long-term plan to set yourself up for success if you don't know the numbers that you're working with to begin with. That's why I really like starting with the net worth. It just gives you a picture of your current financial standing, right? So sit with these numbers for a little bit. Notice what comes up. Maybe by doing this exercise, you realize that you do have a lot of assets and that you do have a lot of wealth in your name. It kind of just pulls us away from our feelings and into the numbers, into the full picture. And on the other hand, maybe seeing this stresses you out a bit. Maybe your net worth is negative. Maybe you have a lot of student loans. Maybe you are digging your way out of credit card debt. Whatever it is, try to approach this without judgment. No shame, no blame, just a game plan, right? This is our starting point. And as we move forward, we will work with this to figure out what to tweak so that you will eventually meet your goals, okay? But I just want us to all ground down and start with the baseline so we know what comes next. Okay? Okay, cool. Moving on. So back in the sheet, just two more things I want to show you is there is a row here for notes. I like to just put any notes that make sense for me to remember of actions that I took in that month or that quarter, right? So maybe you contributed more heavily to your IRA. Maybe you invested, extra amounts into your investment accounts. Maybe you bought a new car, like whatever little things that you want yourself to remember as you do a long-term analysis of your net worth, feel free to drop it in here. The other thing is that this row will show you increases or decreases over time. So it's basically just calculating the total of the current month as it relates to the prior month. So just to show you some quick numbers, let's say I'm just going to put 500,000 here to let this automatically calculate. So let's say that next month your net worth goes up to $500,000. That would be a bit crazy, but again, just using it as an example here, you will show here that that was an increase of $339,000 as it relates to the previous month, right? Let's say all of a sudden you had liabilities of 600,000 and it went down. Here is where it would show the decrease. Again, this is just to show changes over time. Hopefully, they are positive, right? But just gives you a quick glance at your ongoing progress. Okay, moving on. As I mentioned, there is a monthly and a quarterly tab for you to play with. Again, totally up to you to decide which one makes more sense for you. So the quarterly is an exact replica of the monthly, but instead of having a column for every month, we just have a column for every quarter. In case you're not really familiar with quarters, I have an accounting background, so this feels very second nature to me, but I put the dates up here. So Q1 ends as of March 31st, Q2 ends as of June 30th, etc. So maybe you just put a little calendar reminder on all of these dates to check in, fill this out. Genuinely, it should not take more than 20 minutes. I mean, depending on all of the assets and liabilities that you have. But again, we are just compiling data, logging it in, letting the spreadsheet do the math, and seeing where we currently stand. Moving on to the next tab, which is our expense audit. So, first, we started with our net worth. Where do we currently stand? And hopefully, that gives us a better idea of what we're working with and can help us craft our future goals. So, next, to do that, I think the most important thing is to get very, very clear with where our money is going on a regular basis. And in my mind, the best way to do that is just to do a very clear audit of our expenses. So I built this tab with some examples in mind, as well as little instructions up here. Every tab will have a little instruction sheet so you can refer back to it. And again, feel free to come back to this video whenever you need a refresher, okay? So in my mind, the simplest way to review your expenses is to just download your actual transactions. So that might be from your credit card statement, or if you don't have a credit card yet and you put everything on your debit card, you can download it from, your bank statement. We really want to make this as simple as possible so that we do continue to do it, right? I like to check in on my expenses on a weekly basis. I think it just allows me to keep a clear picture on what I'm spending and course correct quickly if I deviated from my original plan, right? The idea is not that you can't go live a joyful and exciting life surrounded by your friends and loved ones and experiences that make you happy, right? But it's just keeping us honest, just keeping us in check. And maybe if we overspent one week, we can just tweak it a little bit the next week or the following week to balance ourselves out, right? I think the more that we check in and are just aware, the more we can make choices that align with our values and ultimately our future financial goals. So, just to walk through some examples, let's say I downloaded my credit card transactions and I just plug them in here. So, date, just a little detail that comes automatically in your transaction statement, the total amount, and then category is where I'm personally going to add this in. So I made these drop downs for you just to include some categories. But again, this is your sheet. Make a copy, make it your own. You can remove any categories that don't really make sense to you. You can add in new categories that do make sense to you. Tweak this to customize it. And if you ever want to edit any of these categories, just click the little pencil button and you can delete, add items, etc. Okay, so this is yours. Have fun with it. I also added two extra columns for you guys. So the first one is notes. And this is just little reminders, right? So maybe you went to Walgreens to get just household supplies, right? Toilet paper, paper towels, cleaning supplies, whatever. You can add that in here. Anything that you just want to note so that when you do this exercise and you do spending analyses in the future, you just can kind of remember the context around these purchases if they're not that obvious. Of course, something like your utility bill. Well, that's utilities, not much to explain there, but if there's any kind of funkier expenses that come up and you just want to keep that reminder, feel free to add it in this column. The second column that I added that I think is really, really important for lasting success is this reflection column. And really, what this is a moment to look at all of your transactions and just think about how you feel about that purchase after the fact. Okay. Was it a need or a want? Did some emotional trigger prompt you to make this purchase that looking back, you realize didn't actually bring you any lasting joy? Is it something that felt very necessary in the moment and that you are very happy that you did? Is it something that maybe was not quite necessary, but brought you immense joy, right? Maybe you went out to dinner with two friends that you haven't seen in ages, and it was a bit more expensive than you usually like to spend, but you left with the fullest heart and you're like, yeah, that was worth it to me. And maybe, next week I'll eat at home more often, but I have no regrets. I loved that experience. Versus you went on a shopping spree because you had a bad day at work and looking back, you're like, yeah, I really didn't need to spend that money. I was just triggered by something that happened. And that's very interesting to notice that it was reflected in my spending behaviors. So again, use this however you want, but what I do encourage is just to bring a bit of mindfulness into your spending, right? It doesn't have to be this very stale, like numbers only exercise. We can start to make it intuitive, start to reflect a little bit and kind of learn these things about ourselves so that as we continue to work through these long-term goals, really, this should be a lifelong exercise. We just feel more grounded in our money management, right? That's my hope for you. No shame, no blame, no judgment, just honest reflection. Okay, so for example, grocery store could be like, I had to get groceries, I stuck to my budget, nothing really to say here. Starbucks, for example, like met a friend, had a lovely time, worth it. Again, make this your own. This is meant to be personal and as enjoyable as possible, okay? And then next, the only thing I want to let you guys know is that this will automatically summarize your spending based on category. So as you continue to add additional transactions, this just gives you a very clear picture of the total. So, for example, let's say your phone bill comes in, let's just give it $100 here, and we can categorize it as phone. You will see here how that automatically updated to reflect your total spending. So that's basically everything for the expense audit. Something that I would recommend is maybe pulling your transactions for the past 3 months and then average out your spending across those 3 months. Of course, maybe one month we're on vacation, maybe one month we are being a super saver. Obviously, things will fluctuate. Life ebbs and flows, and our spending should reflect that. But getting a nice picture of what do we typically spend each month, I think is going to be a great starting point. So have fun with this. Feel free to tweak it and take a look at your expenses. Oh, sorry. One more note to add. Again, this is pulling from bank and credit card transactions. If you spent any cash, like cold hard dollar bills, make sure that you are manually typing them in with the amount and the category. Or if you went out to dinner and your friend put it on her card and you Venmoed them, 30 bucks or whatever, again, make sure that you are tracking all expenses, anything that is outside of the downloadable transactions. Cool? Okay, moving on. So, moving on to our next tab, we have our sinking funds. Now, a lot of expenses can come up that are truly unexpected. Maybe it's an emergency or something that you just genuinely could not have foreseen. On the other hand, some expenses we can plan for before they happen, right? They're not quite unexpected, but they might be happening in the future or they might be an irregular expense, but we do still need to plan for them. So, what we want to do is avoid scrambling for cash or using our credit card for these expenses when they happen. We really want to plan ahead by setting aside small amounts over time for these predictable expenses. And a great way to do that is by setting up what we call sinking funds. So, what I want you to do is use this tracker to list out any upcoming expenses. So, think about things like vacations you want to take, any car or home maintenance, holiday gifts, insurance premiums, or if you have children, maybe summer camp or back to school shopping. I included several examples here just to help you brainstorm a bit, but everyone will be unique. So do go ahead and adjust these categories as needed. So just to run through them, we have vacation and travel, we have home maintenance. So if you are expecting to need to get a new roof in the semi-near future or just any work around the house that needs to get done. Same with your car, any car maintenance, your annual fees, the premiums, registration, insurances that you need to handle, any gifts, childcare, pet care, new tech and gear. If you know that you like to get a new iPhone every 2 years, or your laptop's acting a little funky and you want to start saving for, these bigger expenses, that is a great thing to keep in mind. If you have a wedding or honeymoon coming up, first of all, congratulations. But we all know that that is quite a big expense. And if there are, any other major purchases that you have on the horizon, you can list them out here. And I included months just to maybe help give you a review of the year and maybe just help remind you of things that you wouldn't have otherwise thought of. So, maybe in the summer months, again, you need to send your kids to a summer camp and you can put those costs there. If you know that you want to take a trip in your birthday month, you can put the estimated cost there. If over the holidays you know that you want to have money for gifts, you can include that in December. If you know every February you go and do some car maintenance, you can drop that in there. This is just to help you kind of game plan your year in advance. But of course, you can always adjust these, add things, remove things as you evolve your plan. And what this will do down here is automatically calculate the total of everything that you drop into every month. And then it will give you the amount that you will need to save per month to cover all of these expenses that you would like to pay for in a given year. And you can see how these amounts will adjust automatically. So let's say in November you want to travel for Thanksgiving and you're thinking that will be another $500 there. Well, you can see how your annual total increases as well as the amount that you would need to set aside per month in order to comfortably cover that upcoming expense. Also, if you are interested in a high yield savings account, I want to quickly say that Ally Bank has an awesome feature where you can categorize your savings into different buckets. So you can make, for example, a vacation bucket, a gifts bucket, a wedding honeymoon bucket, like everything that you might be interested in saving for, and you can automate your savings. So this is a really interesting tool that helps kind of keep you on track and automatically saving for these different goals, as well as just a visual of where you stand in each of them. So I will work on a video for that as well, walking through my Ally account, how you can set up these buckets, because maybe that will be useful for you as you work on setting up sinking funds for yourself. I hope this was helpful, and you can always refer to this little detail section up here if you have other questions about sinking funds and why they are so, so important. All right, let's move on to the next tab. Another quick note, as I finished up these videos, I realized that this is going to be quite a long explanation. So again, I really encourage you to take breaks. You can come back to this video and I will put the little chapters so you can always find the specific topic that you want a refresher on, or maybe you do just the first two tabs today and come back tomorrow for the next two, so on and so forth. Take this at your own pace. I don't mean to overwhelm you. I just wanted to build the most holistic tracker that I could think of in the hopes that it helps the most amount of people possible, right? We all have different goals. We're all working on different things. So I just want to lay out everything for you, explain it as best as I can so you can take what works for you, leave what doesn't, and really make this a resource that fits you, your life, and your goals. Okay. Okay, so now we are in our budgeting tab, and I've recorded this a few times and realized that budgeting can be so nuanced that I will go over this sheet semi-briefly, and I think it would make most sense to do an entirely separate video to really get into the nitty-gritty of budgeting, different budgeting strategies, etc., and thinking about these numbers a bit more specifically. But what I will say right now is that budgeting will be an ongoing and fluid process, right? You may need to tweak things here and there to ensure that you are meeting your goals. You might find that one way of doing it really isn't working for you. So there might be a lot of adjustments that will be made over time. And that's why I crafted this sheet to be as interactive as possible. High level, this sheet has a section for income, a section for budget planning, and then we'll outline all of our anticipated expenses. Then every month, you will go ahead and drop in your actual spend for these categories. And you can do a review down here that compares your budget to your actual spend, along with some visual representations. So I included some example numbers here. They are totally made up, but just to give you a sample that we can run through. So first, we want to enter all of our income. I included several different options for you. So W-2, if you get any bonuses or commission, any freelance work, side hustles, business income, or other income that you might have. So for every month, you can go ahead and drop in the income for that month. If you have a W-2, maybe that is just the same standard amount every month. Maybe occasionally you do a little bit of freelance work and you'll drop that in here, etc. One thing to note for W-2 income, I recommend that you put in the number that you get every month after tax, but add back in any 401k contributions and insurance deductions that might get automatically taken out of your paycheck. The reason we want to do this is because the 401k and the insurance will be expenses that we will consider next. So I don't want you to double count them, right? So in this example, let's say that we make $4,000 every month after tax. However, we contribute $200 per month to our 401k, and $100 gets automatically deducted for our health insurance premiums. If that is the case, we would want to include $4,300 for our W-2 income. So that would be the $4,000 that we get after tax, plus the $200 for the 401k, plus the $100 for the health insurance. And in this example, I'm just saying that we make another $200 doing some freelance work, which brings us to a total net income of $4,500. So now we are moving down to our budget planning section. Here is where I outlined three different spending categories that I want you to consider. I like to call these essentials, enjoyment, and expansion. So, essentials are your needs, everything that you need every month to live a comfortable and safe life. Enjoyment is all of the fun things, whatever it is that brings you joy, that is what we will include in this category. And then finally, we have expansion. These are all of the things that your future self will thank you for, the investment in your future and in your growth. So in these gray cells, I want you to set goal allocations per category. A common rule of thumb is 50, 30, 20. So 50% of your income should go to your essentials, 30% should go to your enjoyment, and 20% should go to your expansion. However, I do want to note that this is not a hard and fast rule, and a reminder that personal finance is personal. We are all in different stages of life. Some of us might live in a high cost of living city. Some of us might have kids. Some of us might be single without kids. We are all so different. So I want you to customize these cells to include the goal percentages that work for you. And the reason I wanted to set it up this way is just to remind you that you can change your goals at any time. Maybe right now you are hyper focused on expansion. You are trying to build up an emergency fund. You are really trying to pay down your debt, and you are willing to sacrifice a bit of the enjoyment right now to throw as much money as possible into your expansion category. And it's really important to remember that this doesn't have to be forever. You can remind yourself that, yes, I am hyper focused on my goals right now, and I am sacrificing a bit, but I'm playing the long game here. And eventually, I can start to increase that enjoyment category and start to bring back more of the fun things in life. And I think it's really interesting to lay it out this way because it will be easy for you to see where most of your money is going. So if you find that your budget for the essential expenses is really, really high and it's hard for you to invest in your future or spend on the fun stuff without going into debt, then maybe you want to take a closer look at these categories. For example, maybe you're paying a lot in rent and want to consider getting a roommate or a cheaper car, or maybe taking a look at life insurance that you have. Is it a policy that makes sense for you, or are you overspending in that category? Again, we are approaching this without judgment, just taking a clear look at where all of our money is going within these categories. So, to walk through the logistics of the sheet, here I included the 50, 30, 20 percentage goals, and automatically this goal spend will populate, taking your income and then applying the goal for each category. Next, I'm going to start to fill in my budgeted columns here for each of these categories. And that now that we did our expense analysis earlier in the sheet, we should have a pretty clear idea of our spending habits, which should hopefully make this budget a bit easier to fill out. Again, I want to remind you that this sheet is for you to customize. So I included a lot of categories here, but if any of them don't apply to you or you want to add new ones, remove any, merge any, feel free to adjust all of these in a way that makes more sense to you. So, starting with our essentials, I went ahead and just plugged in some numbers in the budget column here. So, just going down the list, we have mortgage and rent, home and renter's insurance. I split up utilities here, but if you prefer to just have them all in one bucket, that is fine as well. Internet cable, phone, and then if you own a home and identified a sinking fund for maintenance in the previous tab, then you can add that here. Moving into transportation, we have our car payments, car insurance, gas, sinking funds for car maintenance and fees, and then public transportation. For health, we have our health insurance premiums, doctor, dentist visits, and any regular medicine prescriptions that you might need. For daily living, of course, we have groceries, any house and personal supplies that are necessary, childcare if you have children, essential clothing, and then pet care and food if you have animals. And then finally, for other, we have our minimum debt payments, any life insurance policies, sinking funds for other essential items. And then if you have anything else you would like to add, you can add it in here. For our enjoyment, these are all the things that bring us joy, that are fun to do, right? So I have a bunch of categories for you here. Wine and dine, we have restaurants and cafes, takeout delivery, alcohol and bars. We have entertainment. So if you go to concerts, movies, or enjoy additional shopping. And this is where it is up to you to figure out what is essential and what is just fun, right? If you have a pair of sneakers that got a hole in it and you really need a new pair, I would consider that essential. If you see a cute dress and you just want it, by all means, you are welcome to buy it. But I want you to just think about what you consider to be the essentials and then what is enjoyment and kind of allocate those costs accordingly. For self-care, if you have a gym membership, get your nails done, haircuts and treatments, facials, massages. Any subscriptions that you have, again, you can bundle all of these together, or if you'd like to keep them separated, I just included some examples for you. So Netflix, Spotify, Amazon Prime, Peloton, or fitness apps, and then anything else. And then we have convenience. So Ubers, Lyfts, and taxis, if you could have driven or could have taken public transportation, but chose the convenience. Again, there is nothing wrong with this. And especially if you are alone at night, your safety is the number one priority. But I did just outline it in this enjoyment category. In the event that you really need to hyper analyze your expenses, you can just sort of start to pinpoint when are you spending to make your life more convenient versus when it is truly, truly essential. In this category, we have additional home maintenance. So if you have a housekeeper, maybe a landscaper or gardener, and then anything else. So if you identified sinking funds for vacation and travel, for gifts, or other enjoyment, you can add them in here as well as anything else that you would like to include. Finally, we have our expansion category. So thinking about future you for your growth, for your wealth building. And I included several options for you here to get started. So emergency fund, if you are paying extra debt payments, contributing to your 401k or an IRA, any other investments you might have, education or development if you are considering going back to school or pursuing a professional certificate of any sort, if you are saving for a house down payment, or maybe you want to start your own business in the future and are saving for any entrepreneurial ventures. And of course, as always, feel free to add your own. Again, budgeting and planning these categories can be very, very nuanced. So I will be making a separate video where we dive into this in more depth. I think it can be especially challenging to see all of these items and try to consider the order of priority in which you should tackle them. So that again is something that is so deeply personal, and depends on your current journey. And there's no exact number or answer that I can give to you without knowing more of your situation. So keep an eye out for an upcoming video talking more about the order of priority to tackle these expansion goals. So, to recap, as the first step, go ahead and look at your expense analysis and use that to fill in these budget columns. And think about what are the expenses that are essential for your life, what you want to add in there for fun, and then what you want to contribute for your future. Once you have done that, you can return to your budget planning section. So we set our goal percentages, which again automatically gave us a goal spend target here. Once we added in all of our budgeted numbers, it calculated the budgeted spend here and gave us our budgeted percentages. So we can see how we are relating to our goal percentages. You always want to make sure that your goal percentage equals 100% to make sure we are fully allocating everything. And then you can look down here to the remaining amount to allocate. If it is positive, that means that you have additional funds that you have not yet budgeted for. So in this example, we have an income of $4,500, but we've only budgeted $4,269, which leaves us with $231 that we can add into our budget. And this is really where it comes up to you to tweak this process, continue to visit it. You might find that your enjoyment category was too low and you were overspending in that category and want to put the $231 into one of those. Again, maybe you are hyper focused on your expansion and say, I want to take this extra money that I have in my budget and let's say I want to put it towards extra debt payments. So let's put the $231 here just as an example. So this just allows you to play around with setting up goals for the money that you have coming in. Once you have created these budgeted columns, leave them as is. And now every month, I want you to come back and fill in all of the rows with the actual spend for that month. So you'll just run through each category, plug in your actual spend per month, and that will be for all of the essentials, the enjoyment, and the expansion. And I just went ahead and made up some numbers here so that we can take a look at how this updates the sheet. So in this next section, we have a monthly review for budget versus actual. So the budget section here is just pulling from our budgeting spend that we set up previously. The actual section here will populate with all of the actual spend numbers that you added in that second column. And then the difference here shows you the difference between your budgeted spend and your actual spend for that month. And it will also give you the actual spend percentage here. And finally, you can compare the totals. So we have a budget of 4,500, that's our income, but we actually only spent $4,209, leaving us with a difference of $291. And then again, here is where budgeting becomes an ongoing practice and deeply personal. If you underspend in a month, that is great. And it's up to you to decide what you want to do with those extra funds. Maybe you want to add them to one of your sinking funds, your emergency funds. You can throw it at something in your expansion category. Maybe you want to just have it sitting in your checking account to keep that a bit more padded. It is totally up to you to decide how you want to approach this. And if you are a visual person, I included two charts for you as well. So this first one shows your budgeted versus actual spend in each of the categories. And then this one shows your actual spend by category. These will be automatically populated for you. So as long as you are plugging in your numbers correctly, everything else will just update automatically. And like I said, there is so much that we can talk about when it comes to budgeting. So that's why I will make a separate video to dive deeper into that. But my goal here is that this just presents you with a way to play around with your goal percentages so that you can make sure that you are covered right now and set aside money to enjoy your life while also making a plan for your future. And the more that you look at your numbers and play around with this sheet and notice trends every month, the more you can really use this to benefit you and make it your own. And I am a huge advocate for automation. So once you feel pretty confident with your goal percentages and how much you want to allocate every month to these categories, maybe you set up automatic transfers into your emergency funds or extra debt payments, whatever it is that you are working on, so that you know that you are being focused on your expansion categories without having to spend too much time really thinking about it every month. The work is done for you, and as they say, you are paying yourself first. And at the same time, maybe you start to get more used to living within your budget and it becomes more natural to you to spend in a way that just aligns with your values. Let's say you are someone like me who really loves to travel and go out to eat with my friends. Well, then maybe the two categories that you spend the most of your money in the enjoyment categories would be a sinking fund for vacation and travel and restaurants and cafes. Maybe you're someone who really loves shopping and getting your hair done, and that is where you spend more of your money, but you don't really care about going out, or you only take one small trip a year. You can start to just focus on spending in a way that brings you true joy. So I know there is a lot going on in this tracker, but I hope it allows you to just plan for your future, have a clear picture of where your money is going every month so you can adjust things to better fit your needs and your long-term goals. So moving on to the next tab, I made an annual budget sheet for you as well. And this just gives you a nice month over month view of your income and all of your actual expenses each month. So it is super straightforward. Once you customize the monthly budget page to fit your needs, again, you can adjust all of these categories however you see fit. You can go ahead and just paste all of the categories going down here. Then every month, as you fill in the actual column in your monthly tracker, you can add your total income for the month here. I'm doing it in April because right now we're in April. And then you can just paste all of your actual expenses so that they will just line up with the categories that you had pasted previously. And this will just give you a nice overview of your total spend, if you were over or under your income that month, and then a section for any notes or reflections that you want to include. Again, as a reminder, we want to keep our budgeted column as is. And on a regular basis, we are only updating the actual column in the monthly tracker and then copying and pasting it here. So this is pretty basic and totally optional, but I just wanted to give you a way to paste all of your previous information, and you might want to kind of review any trends that you notice over time. So, for example, you might notice that in the summer you are way more social and your spending in the wine and dine or entertainment categories are a bit higher than usual. Again, budgeting might take a while to nail down. There are so many different thought processes and strategies around it. So keep an eye out for an upcoming video where we dive deeper into that. But for now, I hope that this is helpful and happy budgeting. Let's move on to the next tab. Moving on to debt paydown. So, if you are fortunate enough to not have any debt, feel free to skip this section. But for anyone who does, I know it can feel extremely overwhelming. And that is why I wanted to specifically put a tab in this tracker that will allow us to make a plan to tackle our debt. So I put some examples for you, but step one is to just list out all of your debt, the remaining balance, the interest rate, and your required monthly minimum payment for each of these debt line items. That is step one. And again, I know this might be overwhelming, so as much as you can, try to take a deep breath, ground down, and we're just gathering the information. We're just putting it in one place, very similar to our net worth tracker, so that we see what we're working with and we can make a plan from there. So, some examples that I included for you, maybe you have one or two credit cards, if you have a car loan, a mortgage, any student loans, a personal line of credit, anything else, feel free to add your own here. And I included some examples. So let's say we have one credit card that has a balance of $5,000, an interest rate of 22%, and a minimum payment of $150. And then let's say we have a second credit card that has a $200 balance, an 18% interest rate, and a minimum payment of $30. And finally, we have a car loan of $8,000 at a 7.5% interest rate and a minimum payment of $200. Again, these are totally made up numbers, but I do want to flag here that this minimum payment total is what you should be including in your budget in the essential minimum debt payment row. Okay, so do make sure that as you get to this section, you are tweaking your budget as needed to account for this required minimum payment. So now we get to consider our strategy for how we want to tackle this debt. If one of your big goals this year is trying to become debt-free or really putting a lot of your extra money into paying down high interest debt, this is for you. So I included this section here because I want you to decide how you want to tackle your debt. There are two very famous methods, but there's not a one size fits all approach, right? I want you to find the strategy that works for you and that you will stick with and make consistent effort towards as you tackle these goals, right? So the two very well-known strategies are the snowball method and the avalanche method. So with the snowball method, you are focusing on paying off your debts from the smallest amount owed to the largest amount owed, and this is regardless of the interest rate. So you are, required to make those minimum payments, but then if you have any extra money left over, you would put that towards your smallest balance first. And then once that debt is completely knocked out, you'll move into the next payment, the next smallest debt going onward and onward from there. So, a reason that people like this strategy is because it helps you build momentum. You get to kind of celebrate these small wins that encourage you to keep going. It might make you feel really good to just cross that one debt off the list and move on to the next one. So, that is kind of the mindset behind this strategy. Second, we have the avalanche method, and this has us prioritize debt with the highest interest rate first. So, regardless of the balance, we are tackling it by the highest interest rate. So, you'll still make all of your minimum payments, but then any extra funds will go towards the most expensive debt first. And then when that's paid off, you'll move down the list. So, this one mathematically is correct, right? Like interest is very expensive. So if you tackle the debt that has the highest interest rate, you will be paying less interest over time. However, if your highest interest rate debt is also a very high balance, it might take you a longer time to fully pay off that debt. So it might take you a longer time to get that first win, excuse me. So again, it's totally up to you. If you're like, I want to spend the least amount of interest possible, avalanche method. If you're like, no, I need to be consistently encouraged, I need those small wins, then snowball might be best for you. And really, I want you to choose the one that you'll stick with. So pick the approach that feels most aligned with your mindset and money habits. To make this evaluation really easy for you, I set up a little strategy drop down for you here. So all you have to do once you fill in all of the debt here, this will automatically populate. And then you can have some fun analyzing the two options by using this drop down. So if you choose the avalanche method, this will automatically sort these by the avalanche method, right? So it's going to show the highest interest rate first. So you can see it goes from the 22 to the 18 to the 7.5. If you were interested in the snowball, you would just click this drop down here and click snowball instead. And notice how this shifted into the snowball method, which is prioritizing it by the smallest balance. So we'll have the $200 balance, the $5,000 balance, and the $8,000 balance here. Again, this is automated for you. So as you continue to add debt up here, this will automatically populate. So let's say you buy a home and now you have a $300,000 mortgage at a 6% interest rate and your payment is $2,000. I'm totally making up numbers here. Notice how this automatically gets added here. So in the snowball, this is obviously now the lowest priority because it's the highest balance by far. But if you were to do it by avalanche, actually it's also the bottom because it has the lowest interest rate. So you can just see how that automatically updates for you. And here's where it gets interesting because you don't have to choose one approach or the other. You can do a little hybrid of each of them, right? So in this analysis, you may notice, hey, I have these two credit cards. And while yes, the $5,000 one does technically have a higher interest rate, This second one is only $200. So I would much rather just get this one out of the way first and then pivot to the avalanche method where I'm tackling it by the highest interest rate. So you see how you can sort of adjust strategies. Maybe there's just one that you have like an emotional tie to. You're just like, I want to get this debt out of my life. I want to tackle this one first, and then you can choose which one comes next. So, really, again, it comes back to your mindset, your relationship to money, to these debt items. So, choose the order of priority that works for you. And that's where you can come up here and decide what is the order that you want to tackle these. So maybe we decide that we're going to do this first credit card because it's only $200. Then we might tackle the second credit card because it's, pretty high interest. And then we're going to tackle the car loan. And finally, we will tackle the mortgage. So then from here, we can fill in the target monthly payment. So I suggest that you keep your number one priority blank for right now. We'll get to why in a moment. And then fill in the minimum payment for all of the other ones. So the second one has a minimum payment of 150. So we're going to put that there. The car loan has a minimum of 200, so we'll put that there. And then your mortgage has the minimum of the 2000, so we'll put that there. Again, these are the ones that the minimums that you are required to pay every month. Make sure that those are in the essential column of your budget. So the reason I recommend that you keep the number one priority blank for now is because this is a great moment to return to your budget. Remember how we had some money left over and we were kind of deciding what we might want to put that towards? Well, maybe you put it towards extra debt payments, right? If you, instead of only paying the minimum $30, you had an extra $100 in your budget, you might change that to 130 and say, this month I'm going to put that extra money to this specific debt. So that's why I really like doing things in this order, kind of getting a handle on our expenses, how we want to make a budget over time, and then looking at our debt. Once we have that clear idea and a game plan on how we want to pay down this debt, well, now we know exactly where any leftover budget can be sent so that we are actively working on meeting those goals. I hope this is helpful to outline all of this so clearly. And again, the instructions will be up here. You can always refer to an explanation of the two debt payoff strategies to just continue to remind you of what you're working towards and how you're going to get there. Let's move on. Okay, moving on to the next tab, which is the debt payoff calculator. And honestly, I think this is my favorite tab in the entire tracker because it really shows us how seemingly small amounts contributed to our expansion goals can make drastic changes. And I want to show this to you with a real example. So in our previous debt tab, we showed that we had a credit card debt of $5,000 at a 22% interest rate. So as an example, I put those figures in these cells here. So again, there's an explanation of how to use the sheet here that you can always refer back to. But what we want to do is fill in the gray cells with the debt that we are tackling first and then just letting the colored cells and the charts do its thing automatically. So I'm going to plug in numbers from our previous example. So we had a credit card debt of $5,000. So I plugged that in here. It was at an interest rate of 22%, and our minimum monthly payment was $150. So I want to pause here for a moment and just show you that using these figures, if we changed nothing else, the number of months to pay off this debt, again, only doing the minimum payment, will be 52. So 52 months to pay off that debt, just doing the minimum. And if we do that, the total interest that we will be paying is $2,798. Okay. Now, let's say we identified in our budget that we have an extra $100 per month that we can throw towards this debt. If you added $100 to your additional monthly contribution here, you'll now be putting 250 total dollars to this debt. This will automatically populate for you. Again, all you need to do is play around with the additional monthly contribution. So, by putting just $100 per month extra to this debt, your months to pay off the debt now decreased to 26 months, and your total interest dropped to $1,285, which is going to save you $1,513 in interest. I also have this reflected for you in just visual terms. So again, months to pay off would drop down from 52 to 26, and total interest will drop from the 2,798 all the way down to this $1,285. I don't know about you, but this gets me so stoked. This is a massive contribution to your future. I mean, you are cutting down your timeline to pay off debt. You're cutting it in half. You're saving over $1,500 in interest by only spending $100 more on this debt per month. $100 per month is $25 a week. And I know when times are hard, it can be really challenging to make yourself think about your expansion, your future you. But by seeing the power of steps like this, I can't help but wonder if it will make you reconsider what purchases are actually super necessary or when you want to prioritize your future well-being. And then if you get a raise at work or maybe start a side hustle and have a little more money coming in, or you get a bonus, like whatever it might be, or you're just finding additional savings in your budget, you can play with increasing the additional monthly contribution. Maybe all of a sudden you have an extra $50 per month that you can put towards this debt. So change that to 150. So again, increasing it from 100. Now you're contributing 300, and now your proposed months to pay off drop down to 21, and you're saving more in interest. Maybe you now have $200 to put per month, so you can increase that to 200 and just play around with just these additional payments and how they affect the your debt payoff, right? So I hope you have fun playing with this calculator and just being honest with yourself. Maybe right now you don't have the budget for additional monthly contributions, but you are going to work towards increasing that. And you can return back to this at whatever cadence you want to play around with these numbers, see how it affects your future debt pay down process. And hopefully it just gives you inspiration to stick with your goals, to find these bits of savings here and there, and to just remember the importance of putting yourself first and really tapping into that expansion column of your budget. And I know playing around with these numbers might make it seem like magic. And if you don't believe me, I put two different digital calculators that you can play around with. You can put in these exact numbers and they will both give you the exact same numbers. So you can see that it's just math, it's just numbers, and a little bit goes a long way. So have fun exploring those two tools as well if you would like. Okay, let's move on to the next tab. So this covers debt, and I hope it helps you make a clear plan for which debt payoffs you want to prioritize and how even a small amount of extra payments can really go a long way in achieving your goals. I also want to take a moment here to note that maybe you don't want to pay more than the minimum on several of your debts. I do really recommend targeting those high interest rate debts. So, like, get those credit cards down for sure. but maybe you have a super low mortgage interest rate and you only intend on making that minimum mortgage payment every month because you would rather invest that money and get greater returns. So I just want to make it clear here that you don't have to rush paying down all of your debt, right? There is a difference between what they call the good debt, like the debt that allows you to own a home that is hopefully appreciating and has a solid low interest rate, and then the bad debt, which is, your consumer debt, your credit cards, etc. So just something to keep in mind there as you start to plan. I also want to note that interest works both ways, right? We just took a look at how putting more money to your debt will decrease the time to pay it off and the amount of interest that you are paying. On the other hand, if you have extra money to invest and it is generating interest, generating a return, it is remarkable to see how that money will grow over time. I did consider including a compound interest calculator in this tracker, but honestly, there are so many amazing resources online that already do it super well. So instead, what I will do is make a separate video that is all about investing and the power of compound interest using accessible tools online. So you can go ahead and play around with these directly and see the flip side of investing this money and watching that grow once you have sort of tackled your debt pay down, or if you don't have debt and want to focus on that investing element, you can observe that as well. Okay, so let's move on to the next tab. This is our savings goal tracker. So if you have any big goals that you are saving for, this is a great place to monitor your success. So this sheet is pretty straightforward. We are just going to list out all of our savings goals. I included some examples for you here, but again, feel free to adjust these however you would like so that they match your personal goals. So maybe it's vacation, a house down payment, new car, education, again, school or any professional certificates that we previously talked about. If you're want to start a business, if you are buffing up that emergency fund, etc., feel free to adjust all of these here. Next, what you will do is just put in the target amount that you would like to save for each of these goals, the current balance that you have, and this will show you your percent complete and a little progress bar here to just help encourage you as you continue to save for these goals. If it is helpful, you can also add a target date here, just to keep you on track and keep that goal date in mind. So, maybe you want to go on a vacation at the end of this year, but you're not really going to pursue trying to buy a house until May 2028, just as an example. So feel free to, plug in all of the numbers here and just continuously update them and see as you get closer and closer to meeting these goals. And I mentioned this earlier, but if you are interested, Ally Bank has a wonderful high yield savings account where you can actually create buckets for each goal and automate your savings. I use Ally Bank. I think having that just visual representation of all of your buckets and where you are in your savings journey is really helpful, and it's all within the same account. So I will go ahead and make a video about that as well. So if that is an account that you are interested in and prefer something like that over a manual spreadsheet, that could be a really cool option for you as well. So I will make that video and I'll link it below when it is live if that is of interest for you to check out as well. And just to quickly play around with some numbers here, again, these are totally made up, but just to show you how it works. Let's say you now have $2,000 in your vacation goal fund. You can see how the percent complete automatically updated as well as the little progress bar for you. Let's say for the house down payment, you saved an extra $5,000. So now you have $15,000 there. Again, you'll see how these both updated. So just play around with these numbers, see how the tracker automatically updates for you. And I hope that seeing your progress just keeps you motivated and aligned with your goals. So happy saving, everyone. Let's move on to the next tab. So finally, for my investors, I created a portfolio rebalancing calculator for you. This will be helpful for anyone who manages their own portfolio and maybe has several different funds that they invest in and has a very clear goal of the allocation that they would like to set for each of these funds. Now, maybe you are more of a hands-off investor. You just have a target date fund that just rebalances automatically for you. If that is the case, awesome. Super happy that you are just investing at all, and it can be a very hands-off and safe way to do it. So, by all means, if that is working for you, stay with it. But if you are someone who is more hands-on, I just wanted to put something together that can really easily show you how much to put into each fund to stay within your balanced goals. So it is super straightforward. All you will do is fill out the gray cells here. So you can add in the fund name, so whatever funds that you are invested in. I like having the fund symbol as well. This is optional, but just if you like to have that outlined for you. The current balance you will put here, and then your allocation goal you will put here. So in this example, let's say that we are invested in three different funds and we want to have a 40-40-20 split. Again, make sure that this always equals 100% so you can make sure that you are covering everything, right? And then fill in the current balance. Let's say we have $1,000 in this fund, $2,000 in this fund, and $500 in this fund. Next, what we want to do is plug into this gray cell the amount of money that you would like to invest today. So let's say you have $5,000 that you want to invest. You can plug $5,000 in here, and all of this will automatically populate for you. So basically, it's telling you based on the current balance and the allocation goals, in order to stick with those goals, this is how much of that $5,000 you should contribute to each of these funds. So the first fund will put 2,400, the second fund will do 1,400, and the third fund we will do $1,200. It also automatically shows you the new balance for each of these funds and the total balance of your investments, which would be the current plus the addition will equal the new balance once you add that additional investment. You can also absolutely set up automatic investments and put, a percentage or a dollar amount that you would like distributed across all of your funds. But if you do that, eventually you will need to revisit and rebalance, right? Some funds might increase drastically, some funds might go down. So every now and then you should check in and just make sure that your portfolio is balanced in the way that you set in your goals here. So if you are an automatic investor, maybe this is something that you come to once a quarter, once every 6 months, like once a year, whenever you like to rebalance. And it just gives you the quick and easy math on how you will have to switch up those funds a bit to make sure that they are balanced the way you would like it. Okay, everyone, thanks for sticking with me. I know that was quite a long video and we covered a lot. I want to express again that I am so proud of you for just being here, for being curious about your financial wellness, for really tackling your financial goals. And I really, really hope that this tracker is a tool that helps you get there. And I just want to remind you to be kind with yourself, take this at your own pace. You can circle back to this video whenever you need a refresher, whenever you're ready to move on to a new tab in the tracker. And I am just always rooting you on. So thank you again for your time. Happy financial tracking, and I will see you in the next video. Bye.